All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis. We have some interesting things to go over today. By the way, my sound should sound a lot better. You know what? I've been fooling around with my microphone, right? And I'm like, I've moved my microphone and I'm listening back to some of my videos and I'm like, man, my sound sounds exactly the same. What's going on here? Turns out I've been using the mic on the camera, not this mic. So it only took me 2 years to figure that out. Great. So anyway, hopefully you guys can hear much better sound now. Yeah, that was the problem. As you could see, I'm a little slow with technology. Anyway, thank you for joining me. I appreciate your patience for these 2 years and my bad sound. So here's the thing, guys. Welcome. If you're new to the stream, here's how it works. The first thing I'm going to do is I'm going to go over the economic calendar very quickly. And then we're going to talk about my Bitcoin analysis in light of the SEC allegations and what setups to consider this week, okay, the proper mindset for this situation. And then I'm going to answer your questions about stocks or altcoins and things like that. Oh, hold on a second. Let me get my let me move my TradingView. I am simulcasting on TradingView here. Forgot about you guys. Okay, so I was going to say, if you have a question about a stock or an altcoin, now would be a good time to share it in the channel. If it's an altcoin, please put USD or USDT after the symbol so I get the correct symbol. Let me just move this mic a little closer. All right. Let me put it over here. Okay, so now, also, if you'd like to share what country or what city you are from, that's always a fun fact. I am streaming from the greater New York City area, also known as Northern New Jersey, and it explains my funny accent at times. Now, first things first, let's go into my favorite slide. Actually, it's not my favorite slide, but let me show it to you here. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, man, I've been noticing things have been slow. You know, maybe it has something to do with the time of the year, maybe other variables, but man, the markets, everything has just been very stagnant, it seems. And we're going to address this situation going on with the NASDAQ and, you know, the stock market here in the US and the Treasury Department, because this is a very unusual situation. And there are some very important lessons to be learned from this. Okay, so we're going to go over those things. Anyway, so let's get this thing moving here. First thing I want to talk about is the economic calendar. By the way, you guys, if you're interested in things like my trade scanner, I'm just going to let you know now, there are links in the description, whether you're on TradingView or on YouTube. Check the link in the description. I have the membership stuff there. Also, if you'd like to join my community, it's free. I'm looking to add more value to the free members of my community. Right now, the greatest thing you can find there is the Learning Resources channel. In that channel, I have a number of links that go to some very important educational pieces of information, a lot of theoretical stuff, but stuff that really you should be very familiar with if you want any chance of success in this deceptive game. Okay, so that's free. Join my community. I am looking to add more value to my free members as well as my paid members. I have a lot of things coming up. You guys, many of you know some of my plans. Anyway, check that out. All the links are in the description. And if you like my video, please do me a favor. Press the like button, press the boost button, subscribe to my channel. I am working on content. I know I've been saying this for weeks, but I do have it on its way. I'm going to be producing educational content for my channel. So there'll be some important stuff there. And I have some other interesting things too coming. All right. So anyway. All right, so with that said, let's talk about the economic calendar. And let me say hello to a few people. Stian, hey, good to see you. Stian's been very helpful as usual. Han, good to see you. Alex from Romania. You know, I've been worried about you, Alex. I haven't seen you in a while. I'm like, maybe he's hanging out with the Tate brothers or something. I don't know. He's certainly not in my channel. Levant, good to see you. Raman, how are you? Okay, all my regulars. Johan, how are you? Okay, cool. All right, good to see everyone. All right, and by the way, on TradingView, if you can't see me, just do yourself a favor and press the refresh button on the browser. That usually resolves the problem. All right, man. I guess this title stinks, huh? Because I only see just a few people in here watching me on YouTube. So much for that title. I try to come up with these more creative titles so that maybe people will click, but I guess not. All right. But it's not like I'm trying to trick people here. There is some value. Anyway. All right. So before I make my chart bigger, let's talk about that economic calendar, shall we? Who wants to tell me? Actually, I think Steen mentioned it in the active investor chat. Who wants to tell me what's going on this week as far as economic calendar, the importance of the economic calendar? Who wants to tell me? Well, there it is. Steen learned to anticipate. Okay, before I even got to it, look, he put it a few minutes ago. So unemployment rate 6.13, 6.14 PPI, right? 6.14 Fed interest rate. And the press conference, 6.15 Euro interest rate decision. Now, here's the thing, unemployment rate on 6.13, that's tomorrow. What unemployment rate? Is that US? Because, this is usually non-farm payrolls, which has a lot to do with the employment situation, comes out the first Friday of each month. So that must be a separate, I don't know what that unemployment rate is. Okay, PPI, now that could be somewhat interesting if there are any surprises, but in recent time, those like PPI and some of these other numbers, they haven't really been anything eventful. CPI has, but some of these other numbers, not really. Maybe intraday, you get some kind of temporary movement, but other than that, I wouldn't worry too much about those numbers. The big thing this week is the Fed funds rate, okay, on Wednesday. And that usually comes out at 2 p.m. Eastern time, followed by the press conference at 2:30. This is important for a number of reasons. For one, you want to be able to be aware of the potential range expansion if there are any surprises. The market expects one thing out of the Federal Reserve. If the Federal Reserve says something that the market was not anticipating or pricing in, you can see a dramatic movement one way or the other. There's no way to know in advance unless you know Chairman Powell and he tells you, okay, personally, what he's going to say. There's no way to know. So it can change charts very dramatically. Now, a key point to the FOMC meeting is this. Going into the meeting, meaning today and especially tomorrow afternoon, going into the meeting, prices can get very tedious and very erratic. So if you're not at any major levels or anything, just don't waste your time. Just don't waste your time because the market tends to wait until after the meeting. So if the meeting has any type of dramatic effect, we'll see it on Wednesday afternoon and possibly lead into Thursday and Friday. All right, especially if there are any surprises. So that's the key news item for this week. Please be aware of it. And if you have any positions going into it, please consider that information for mitigating risk. What can you do? You can tighten stops. Perhaps if you have a position with some profit, you can take some of that off the table. Like there are a number of things that you can do to reduce your risk. That's the idea. Okay. The key point of this game, in case you're new, a lot of new people don't realize this. The key idea is to extract profit or a profitable outcome while taking the least amount of risk possible. Okay. And you want to do that consistently. That's not easy to do. Anyone can make money randomly. We're not interested in random. Anyone can do that. In fact, most of your favorite frauds, they do that all day long. They make money randomly and then they brag about it and they fool you into watching their content. Anyway, before I get into one of those, let's see who I have. Hey, Matos, how are you? And Michelle, good to see you. Malad, all right, go my TradingView regulars. Good to see you guys and girl. Okay, so now, hey, Kai, how are you? Let's move along here. So that's the economic calendar. You guys set on that. Let me know if you have any questions, but that's an important aspect of the trader mindset. Let's move along here and let me make my chart bigger. Okay, like that. And if you notice, I've taken the ATR off, but I've used that trick that Johan was trying to tell me the week before. See, Johan, I remember he was trying to tell me you can press a button to just hide the ATR. It's actually still there. I just have to press a button and it'll come back. See, if I press this button over here, where is it? If I press this, okay, never mind. It was there. Hold on. I got it right here. You see, it says it right here. Oh, I have to press this over here. Here we go. Look, that brings it back. See that? Brings it back. And if I want it to go away, go away. Okay, hold on. Go away. There it goes. So thanks for that little keyboard shortcut. Let's talk about Bitcoin now, shall we? Now, actually, before I get into this level right here, let me make the chart bigger. Right, we have Bitcoin developing. We have a situation developing here. I wrote about this in my TradingView article, so hopefully you guys read that. Before I talk about this situation, I want to bring up something else, and that is XRP. Okay, now I'm bringing up XRP because this thing, there was a trade signal from the trade scanner on it. There were actually two signals, but the most recent signal was on June 10th. I want to mention this real quick because there's an important point that I want to make before I get into Bitcoin. All right, and this is the point that I want to make. I am now on a 4-hour chart, and one of my guys took this trade, and he took it on paper, but still, it doesn't matter. One of the great things about the trade scanner, and I keep telling people, is it's a great tool to learn how to trade because it takes a lot of the hardest part, which is analysis. It takes that off your hands and it comes up with the idea for you. The second hardest part is trade management, and that's the part you have to do. So basically, the trade scanner allows you to focus on trade management. If money is going to come from somewhere, it comes from trade management, not the analysis and not the system. People make this mistake all the time, and fake gurus love selling you these systems that paint little arrows on your chart because they try to put it all the emphasis on the system. Oh, just follow this arrow and you'll make billions of dollars, right? It's all nonsense. The thing is, people want a system that they can blindly follow, and they want the system to take care of all the work. The outcome, the performance is in the trade management, the order placement. Okay, the win rate that they always push on people. This thing has a 99.9% win rate. How many times have you heard that from a YouTube commercial, right? Then you buy the system and you don't make any money. Win rates fluctuate. They fluctuate with the environment. So in a nice strong trend, maybe the win rate was higher 3 months ago. The trend gets a little funky or it gets very indecisive, then the win rate suffers and goes back to random like everything else. So you need to be aware of that, right? And the trade scanner works in a similar way. It's a trend following system, but it calls out momentum changes. One of the key points to the trade scanner, and I'm going to talk about this trade here very quickly, is it calls trades that I would otherwise never call. I don't trade XRP. I never trade XRP. And I certainly don't swing trade XRP. So this thing called XRP long right here, right? In fact, I'm going to point out the exact candle. This candle right here, that is where it called XRP long. Let me make that nice and big so you guys can see it. It called it long, right? And the price was like 50 something, right? What's the closing price here? 50.74. The price that it called was 50 something or 50.49, something like that. Okay, it called as a long, somewhere around there, and the date was on June 10th, I believe, right? So it was right. It was one of these candles in here. Okay, we'll highlight two of those candles. Now, there was some green in this. In fact, that trade is still above its entry price, as you can see here, right? Now, the second point that I want to make about the trade scanner, because again, it picked an opportunity that I never would have called. I don't pay attention to this coin. I never would have called it. So it called an opportunity that, you could have participated in. Now, here's the thing. The trade scanner was meant to be for swing trades. But if you use it as a day trade instead, that's really where you have the risk control factor in place. And you simply adjust your ATRs to the day trade time frame, like I've talked about in recent streams. And I have some people helping me. We're trying to put together an automatic way to generate the orders for the ATR. So you simply change your time frame and then you have all your orders and all you have to do is place them. Anyway, I just wanted to point that out because number one, I wouldn't have called it. Number two, it was green. If you took this as a day trade, this could have been a completed day trade on something like that because the ATR, the ranges of your take profit and your stop loss are going to be smaller if you're using a 1 hour chart, a 30-minute chart, or a 15-minute chart while using the swing trade notification, which is the system here. Does that make sense? So Steen says, I took a paper trade in XRP from the signal And see what I mean? And you're not the only one. Thanks, Steen. Look, Steen actually put this is the signal. That's actually what appeared in the text channel. If you're wondering where this shows up, it's in the Discord community. I have 2 channels in there, one that calls stocks, one that calls coins, and it's an automated system that calls these notifications. That is exactly what the notification looks like. Steen copied it right out of the channel, right? 5052 was the call on 610. And, if, like I said, if you took that call, applied the ATR technique, you would have had yourself a nice little take profit. And that's something that I would not have called myself. Anyway, so I wanted to review that real quick. There is value in that trade scanner, and I'm trying to teach people how to better utilize it. In fact, I have a webinar coming up on Wednesday. I have it scheduled for YouTube, so you can see it there. To get on the list, it's got to be on the email. Don't worry about the email list. Just go to the YouTube channel on Wednesday. It's at 3:30, and I'm going to do a webinar that basically covers that, but also focuses on candlesticks, okay, and how to use candlesticks to day trade. Anyway, that's XRP. Let me know if you guys have any questions about that. All right, that's XRP through the eyes of the trade scanner. Now, let's go back to Bitcoin, and let's go to the daily chart, shall we? And here's the thing. So, yeah, and by the way, like I said before, people, if you're not in my community, my Discord community, you can go there and you can join that for free. There's a link in the description and also in my signature on TradingView. All right, cool, people. So, okay, sure, no problem, Matos. Thanks for helping me out with that. Matos is trying to help me out with some of this programming stuff as well. So let's talk about Bitcoin, and let's talk about the scenario and the title of today's stream, which is trade price, not news, right? And I mentioned the SEC allegations. So let's talk about that real quick. SEC, we all know what took place a week ago. SEC came out and they sued Binance and they sued Coinbase for not registering there's a bunch of these allegations. Now, most interesting, I mean, it's all a lot of legal talk. It can be very boring to consume. But if you take a look at the Binance portion and the funny stuff that they were doing to inflate their order books, all right, and on top of that, your friend CZ takes $11 million and buys himself a yacht. How nice is that? With your money. I remember a guy came in here once, right? I was criticizing Binance because I said their platform is ridiculous. And I was saying all these negative things about it. And the guy comes in, how come you don't like Binance? Well, now you know. So anyway, I hope I hope they're put out of business, because you shouldn't be using $11 million of customer funds to buy yourself a yacht. You shouldn't do that. Anyway, so the point is this. That type of information, it knocked the wind out of Bitcoin, okay? It changed the perception. This is the important part. Don't get caught up in the drama. I know I get excited, but don't get caught up in the drama. Bitcoin has been fooling around. That news came out around here. Let's look at the price action, because what I want to do is I want to connect the events of that news to the events on the chart, so you can better understand how to utilize the context of the chart or the price, not the news. Because the first thing that everyone does, let me check Twitter. Let me check YouTube. Let me check this. Let me check that. Because you want to see what's going on. That's a waste of your time, in case you haven't figured that out yet. Absolute waste. What you should be looking at is the price action. Now, understand something. Before all that drama, Bitcoin was fooling around here. There was a nice bullish trade on Bitcoin. Have you guys seen Litecoin since the trade scanner called it? Anyway, we had this situation, right? And I was warning people. I even wrote an article a week earlier, random price area, right? For Bitcoin. Just stay away from it either way. You need catalysts to create opportunities. This news item from the SEC, that was a catalyst. It doesn't matter if it's positive or negative. It's a catalyst, and it moved the price into an area of interest. This is the area, the 25K area. I've been writing about this for weeks. We need something the price is not going to go there on its own, although it can. It helps when you have a catalyst, because it basically shakes people out of their positions. It creates unnecessary fear and opinions, right? So here it is. It tests the 25K area, and it comes right off of it, only to go back. All right. Now, this 25K is very important. And it could be part of all this drama. The thing is, it doesn't matter. It doesn't matter what the future is. Bitcoin doesn't need these exchanges. All right. So sure, maybe there'll be less movement, less whatever volume in Bitcoin, but who cares? Many, many years ago, when no one knew about Bitcoin, I was involved in this group, right? That was basically teaching about Bitcoin in New York City. And do you know, this was before Binance, before Coinbase. Back in those days, Mt. Gox was the place if you were going to trade online. There was a place called Union Square Park. And in that place, a group of people used to gather every Tuesday, I believe, and every Friday in the evening. They used to gather and they used to trade personally, peer to peer, in a group, outside, in person, right? So you don't really need these exchanges. They're just an unnecessary middleman anyway that looks to fleece you. But whatever. All right, that's another story. I'm not going to get into that. The whole non-crypto broker market is an industry to take retail traders' money, right? And SEC does not care. You can watch basically Daily Insider, right, on the stock market, right? Well, true. The SEC has its own agenda, right? I'm not saying they're the good guys here. In fact, I suspect that if you look at the relationships between the head of the SEC and your friend Bankman-Fried, if you look at the relationships between the two, this looks like Bankman-Fried's revenge. I mean, that's just a conspiracy theory, but there is a relationship between the two. And CZ is the one that caused this FTX problem to begin with for his own personal gain. So I'm not surprised that he's like number one on their list, right? Anyway, the SEC doesn't care about you. That's true. It's a political agenda. But all that aside, my point is this: don't get caught in the drama. Focus on the price action. Now, so all that stuff, all that drama occurred basically in this blue rectangle right here. Okay. Don't let this plant the seeds of the future for you. Do not. It doesn't matter that they're getting sued. It doesn't matter. They have lawyers, blah, blah, blah. It doesn't matter. What matters is price now and how price is behaving, because here's why. The price knows more than you. The price knows more than me. It knows more than everyone. So if the price is not at 10K right now, that means this is not that big of a deal. Okay, so we should be looking at this level as a potential opportunity for a long, because here we are, range low, potential double bottom in a broader bullish trend. That is the only thing that should matter to you. No opinions. This is not an opinion. This is based on price structural fact, right? This is facts that I'm getting from the price structure. I'm not making it up. You can see it right here on the chart. So we're flirting with a support level that's a key level. And this whole area, realize we can go below 25K slightly. Maybe we touch the high 24s, possible. But just don't lose sight of the fact, no matter what they say, no matter how many allegations or who gets charged with what, no matter what they say, if price does not compromise that support level and it maintains it, then it's likely the probability points to a bullish bounce, not, Bitcoin going to 20K. Now, here's the thing. If another catalyst comes out, maybe the FOMC surprises everyone on Wednesday. I'm just throwing that out there. Maybe there's some kind of bearish surprise for Bitcoin, right? And it totally clears 25 and 24K. And you see a vertical candle. I mean, a very decisive vertical candle, right? You see something like this. Okay, something like that. Or you see another situation similar to this, right? Usually when a bearish move or a bearish cycle, like a broader one, is going to be sustainable, it usually begins with a pretty powerful initial move, like the one up here. Okay, since that move, Bitcoin has just been garbage, right? It's just been in this consolidating higher low structure ever since that, right? So if you get something similar to that, something very powerful, that's what's going to open the door to the next support level, which is 22 to 20K, that area there, right? That's what's going to open the door to something like that. And that would be a pretty bearish situation, at least for the short term. So keep that in mind, right? So here's the next lesson that I want to make sure you understand is that if this long idea fails, because right now I'm thinking long, I'm not thinking short. There's no reason to think short on this time frame. Right? As a swing trader, I'm thinking long. If the market proves this idea wrong, because I don't claim to be right, the market either makes me right or not. If it breaks, then I adjust. Okay. Now, I'm not getting long now. There's no reason to. I don't see a setup. All I have is an area of interest. As people know who have taken my training program, right, there are steps. First, the market needs to reach an area of interest. Then I need to see some sort of formation, then a confirmation, right? I see the location. I see some formations, right? I see double bottom situation developing. I see all those kind of things, but I don't see the confirmation. So why am I going to take risk? There's no reason to, right? That's why I never got sucked into this large green candle. I never got sucked into that because it wasn't the kind of candle I want to see. It had not fit my confirmation criteria. And I miss moves as a result of that, but I don't care. There are also many situations where it's a good thing that I never got involved because look, we're back at good prices, right? So my point is, when I see the confirmation, I'm looking for like a pin bar or some kind of bullish reversal off this area. I'm looking for price to retest this 28K area. That's the nearest resistance and the most realistic one. Don't get unrealistic. Well, it's going to 30K because I said so. Don't get caught up in that opinionated nonsense. There are so many people with opinions, and then they put timestamp. Oh, by this time it's going to be here. You know how many clowns? Do you know how many morons in January were saying that Bitcoin was going to be at 40K by now? I still don't see it. Where is it? Okay, still no 40K. I wonder why. So don't get opinionated. Look at realistic support and resistance levels. If I get a swing trade, I'm looking for 28K. That's a nice 3,000 point move, possibly. Using my ATR, I even wrote it in the article. I'm expecting to risk 1,500 points to make 2,200 points, something like that. Maybe not exactly, but something like that. 1.5 to 1 reward risk, and that's acceptable for a swing trade. I'm keeping my expectations low, and I'll be happy to take that, right? And that's it. If it runs further than that, great. I don't need to be in it. I mean, you always have options, meaning you can reduce your position instead of taking the full profit at a take profit level. You can reduce your position and try to let some ride. That's the best way to capitalize on a broader move. But that's another story. All right. So my key argument here is looking for longs here as a swing trade. Now, as a day trader, it's another story. I'm not referring to day trades here. That's a completely separate system. Sure, you could consider shorts and longs at such a level. As a day trader, and that's another point that I want to make. As a day trader, one of the great benefits to putting on day trades is you have no opinions. You don't care where the market is today. You don't care where it is tomorrow. You're just looking for brief spurts of momentum. Your risk is smallest and your take profit, of course, is small as well. But that's the whole idea because you are mitigating the broader magnitude risk. That's one of the pros to being a day trader. Of course, you have to have a lot of experience because if you don't, it doesn't matter. It's like you're starting out. People who want to be day traders, right? It's like starting out, you're learning how to play the piano and you want to play a grand piano. You're still going to sound bad, right? It doesn't matter. If you have no piano experience, it's not going to matter. It's the same thing. Learn how to swing trade first. Learn how to invest on the bigger picture first. Understand the cycles that are in play. All right. So that's Bitcoin. Let me know if you guys have any questions. So like I said, if it breaks, then we have a new piece of information. Otherwise, we don't have opinions. I suspect we hold and we bounce because that's what the structure implies. That's it. And I'm very open to adjusting that if the market wants to provide new information. I go by what the market tells me. I don't assert my ideas on the market. Does that make sense? All right. Let me just show you another chart here real quick before I answer your questions. So let's take a look at NSX because there's some ridiculousness going on here. This is the NASDAQ 100. We are now up 212 points at 14,765. All right. That's not the exact futures number, but it's pretty much the same idea. Okay. This is the CFD. Look at this. Now, this is 100 stocks. Now, there's a point that I want to make about this here. This is complete nonsense, right? If you look at this from a fundamental perspective, the thing is, don't look at it that way. There's plenty of people online saying there's a thing with the Treasury. The bond auctions are not absorbing this money, and the U.S. Treasury is basically just printing money and it's going into the market. There's all these opinions and blah blah blah, right? And that may be true, but that information is not going to help you trade. So what do you do in this situation? First, look at it from the perspective of risk. Forget what's going on as far as all the fundamental talk. Forget the talk. Stop trusting people. Trust the price. When you see a situation like this, number one, you do not invest at these levels. These are high risk. You're taking very high risk. Let's look at this on a weekly chart real quick. This is a weekly chart of the NASDAQ. This is unusual. Look where we are. Okay, we are pushing another important resistance. We broke this one, right? Blew right through it. This one over here. See this? Here, let me put that there. All right, look, blew right through that. And we're just going vertical. It's just a straight line, pretty much. For weeks, 1, 2, 3, 4, 5 weeks, just vertical. This is abnormal and not sustainable. And I know I've been saying this since 13.4, but the thing is, the higher it goes, the more risk you take. And this is going to go for all you stock traders out there. So if you're buying your Tesla and you're buying your Apple now, you, my friend, are taking the most risk. And you're taking that off of a savvy investor or an institution or a market maker who's very happy to give it to you at these levels, because these are high risk levels. These are not support levels. You want to buy stock for the long term? You want to invest? Find your supports. We have supports nowhere near. These are our, look, this is our first support zone right here. That's a long ways from here. Okay, what is that? 13.7. All right, that's 1,000 points lower. So what is this up? 1.5%. So you're talking about like what? 3%, 4% lower. I don't know the exact number, but that's a pretty, that's a normal, that's not even a dramatic pullback. That's just a normal, healthy pullback. I mean, look back previously, look at the kind of pullbacks we'd had previously, previous to the Treasury Department's move here, right? These are normal pullbacks. So, and we haven't had one, a real pullback since what, April? I mean, look at this. So the thing is, take this as a warning. Don't be investing in the long term here. These are horrible prices. You're taking the most risk. If you want to trade in this game, if you want to participate, no problem. Here's what you do. Step one, lower your expectations, right? Meaning you're going to take small bites. You're not expecting much in the long run. You're expecting less. Number two, day trade. Okay, because you're keeping your risk small on both sides, right? You're keeping your risk, you're reducing your risk to only one day rather than the entire magnitude of the structure, which can be thousands of points. Don't get caught. I'm warning you, this is like an altcoin. Don't get caught. Okay, number three, the third choice you have in this situation is you can just avoid it altogether and just not trade until you reach a level of interest. We're just not there. These are resistance levels. These pullbacks are hardly pullbacks. So you can think of those as maybe short-term day trade, possibly swing trade opportunities. And when I'm talking about the NASDAQ, I don't mean in the NASDAQ, I'm talking about stocks, because this is a reflection of the stocks, okay? Same with the S&P. Let's go to the S&P real quick, right? Same story. Look at this nonsense. Complete nonsense. But don't fight it. I don't agree with this, but it doesn't matter what I think. All that matters is the risk. Would I go long here as an investor? Absolutely not. Would I day trade on the long side? Sure. Why not? Take advantage of the momentum. That's the whole point. Okay. All right. So I just wanted to run through those real quick. And look, always keep an eye on this, the bond market. The bond market is still nowhere. This is nowhere. This is nothing. This is the 10-year note. Look at this. It's in the middle of nowhere. So nothing is happening here. Okay. Interestingly enough, we're not going to see any major changes until we see something happen in this market. We need to take out highs or take out lows or something. There's just nothing going on, interestingly enough. All right. So those are the main things I wanted to cover there. Let me start running through your questions here. Again, if you like my content, please do me a favor. Press the like button, press the subscribe button, press the boost button on TradingView. I appreciate that very much. And if you haven't checked the links in my description, do that. You can get access to the trade scanner and all that other stuff in there. And I do have my webinar coming up on Wednesday. Okay. It's going to be on YouTube and in my webinar platform. So, check that out as well. All right. So let me start with some questions here. I'm going to start over here on TradingView, see what's going on over here, because you guys are cool. U.S. Congressman Warren. All right, all right. Let me go back to the beginning. Sorry. All right. So I said hello. Okay. Any thoughts on VGT ETF? VGT, just LP wants to see. All right, let's take a look. VGT, and you're saying it's an ETF, Vanguard Information Tech. All right, let's take a look. Okay. Yeah, my thoughts, it's the NASDAQ. All right, it's nothing more than a reflection of the NASDAQ. Look at it. Look, it looks exactly like the same chart. So everything that I just said about the NASDAQ applies to this. Don't buy it at the top. All right, where you are right now. If you're in it, great time to take something off the table. If you have some shares, reduce your risk. Otherwise, analyze your levels. These are your levels right here. Okay, and this one up here is a minor level. So this thing turns, right? You're looking here possibly for day trades, maybe a swing trade if you're doing that with this thing. If it breaks, you're looking at these levels. Okay. The trend, it's going to take a while, obviously, to reverse this trend. But keep in mind, I mean, look at the price action you had back here at this time. Look how that turned and look what it turned into. So that, of course, as we know in the markets, history repeats itself. That kind of action can happen. Obviously not yet. So look at this from the risk perspective, not the reward perspective. People see a chart like this. Oh, I'm missing out. It's just going to keep going higher. I better buy this now. That's the thought that may be going through your head. And then you read some article, market's running away without you, so I better buy it. And by the time you buy it, you buy the top. Don't buy the top. That's my thought on VGT. Anyway, thanks for mentioning that. I hope that helps. Okay. What is a trade scanner? Is that okay? No, trade scanner is I explained it before. The trade scanner is a screener that I built myself, and it's available in my Discord community. It's it's two text channels that actually produce text notifications, right? Like the one Stian shared before, right? The text notifications here. I'm just going to pop it up real quick so you can see that again, right? Where is that one from Stian here? The text notifications look like this, right? This is what they look like. They look like that. So the channels, one is for stocks, one is for Bitcoin and the top altcoins. Okay, the top 10 capitalized coins. That's what that is. And basically, it gives you the notification, and then you have to put the trade idea together from there. That is what the trade scanner is. I call it trade scanner because it finds trades. It finds trade ideas. It scans for trade ideas based on my criteria, and it pops them up in the channel, and then you do something with it. So I always tell people, make sure you have your push notifications set for those channels so that you don't miss any of those. That's what that is. All right. So you want to learn more about that, just check the links in the description. That's how you, and I have plenty of student meetings and stuff where I teach people more on how to best utilize it. And people have been doing pretty well with it. I like to see that. Okay. How do you place orders then? I'm currently using Binance. So I'm curious what to use. See, the problem with some of these exchanges is you can't place orders the same way, like when you're using something like MetaTrader, right? I have my reservations about something like MetaTrader, but the order placement is good. It's simple, and that's the way it needs to be. It's very straightforward, and it does what it's supposed to do. Order placement can get complicated, and there's no need for that. Binance makes it's a mess. Okay, so I wouldn't know how to explain how to place these orders on Binance like the way I place them on something like MetaTrader, where I set a stop and take profit, and it's an OCO order, meaning one is touched, the other one is automatically canceled. Some platforms you have to expressly set it up that way, while others like MetaTrader, it's all automatic, which is the way it should be. Anyway, I don't think you have that functionality on Binance. I don't know. I don't use Binance. So I hope that answers your question there. So like, again, because I use MetaTrader for something like if I have to put a trade like on Coinbase, a lot of times I just have to manually set it up, right? Because there's nothing automated on there. I have to manually set it up if I'm doing something like Bitcoin. But the nice thing about MetaTrader, and it depends on your broker, you can trade the CFD version of Bitcoin or some of these altcoins. That also makes it helpful. It's the same thing. It's not the coin, but it's sort of like a derivative, the CFD version. All right, U.S. Congressman Warren officially filed bill to restructure the SEC. Okay, that's interesting, Nasir. Very interesting. And maybe they do that because, yeah, we know there's political nonsense going on there, and maybe they get rid of him, our friend Gary there. And maybe that's a positive, and maybe that changes the perception. All I was saying before is don't get too caught up in that, right? Focus on the price, because the price knows everything, no matter what the news says. All right, let me move along here. Let me answer some YouTube questions. So Stian asks me, can you share your thoughts on the market cycle chart compared to the Bitcoin chart? Are you talking about that market cycle chart that you shared in the chat earlier? That was a very interesting chart. I mean, I agree with the market cycle chart. That market cycle chart was very reminiscent of basically like the wave cycles and the sentiment that occurs on that. I'd have to pull up the weekly chart. It'd be hard for me to explain that. I mean, the chart looks very similar to the Bitcoin chart, which is what your point was. I don't have the market cycle chart to show here, so I can't really make that comparison. But basically, what was nice about that chart, maybe you have a link you can share where people can find an image of that chart. Basically, it talks about the sentiment at these turning points, right? What the sentiment is like at these turning points, or what the sentiment is like during one of these bull runs. And it's good to be aware, because you'll see that sentiment reflected in, by fake gurus, news outlets. You'll see that general consensus reflected everywhere. It used to be, 35, 40 years ago, it used to be on magazine covers. Okay. But now you see it on things like Twitter and on like Facebook, and wherever there's public opinion, right? People like to believe that wisdom of the crowds is a good thing. It's a good thing if you're a contrarian. So that's what I would say about that, but I can't make an actual comparison without having an example of the chart here. So thanks for mentioning that. Maybe, like I said, you can share the link where people can find that. If I may ask another one, what do you think of Lena USD? All right, Lena, let's take a look. I haven't heard from that one in a while. Lena USD. Let's take a look. See, when I do this part of the stream, that's when people sign off. Like, no one wants to see this, but they're missing out. Lena. Now, you say that this is in a bullish trend. Let's go to a weekly chart. It's the first thing you should do if you're not familiar with a particular product or coin or whatever. This is not exactly a bullish trend. You're saying, okay, since the beginning of 2023. Okay. So specifically, you're saying this is the bullish trend part. All right. Yeah, sure. That's a bullish structure, right? You have some higher lows and higher highs. But as you could see going back, it's not bullish at all. So in a situation like that, the first thing you should do, look at your levels. First thing, a lot of times where it hesitates in a situation like this, right? That situation, notice how many rejections you have off of this horizontal line that I drew. Look at all of those rejections. That is not a coincidence. That is an old support level, which has become a new resistance, right? You had this situation where it blew through. I don't know if that's a bad tick or if that was news or whatever that was, but as you can see, it reversed pretty quickly and went back below this particular level. So that level is the point of reference that you have to keep an eye on. So a couple of things right off the bat that tells me. You don't be a buyer here. That's a place to reduce risk. That's a place to sell to people who don't know any better. That's what that is. If you want to buy this thing, if you're thinking short-term swing trade, look for supports. Right? You had a support, a week ago? It touched support. I guess that was on that Bitcoin pullback or whatever, when Bitcoin pulled back 1,000 points, right? That's your area right there. That's your support area, which is what? 9 cents? No, 0.0093. So it's not even a penny. It's almost a penny. All right, in that area right there. So that's the area. If you're looking for support, consider that area. Look for reversals there. I wouldn't expect a lot from this. These are hype coins, right? These are just garbage. Like if you're in a situation like this and you happen to be long because it's coming off of this area right here, which is that's the support area that we just observed from a week ago. If it's coming off on something like that and you're in it, place your profit, you take profits up in this area, look to take your money off the table. Do not be too optimistic about this thing. Keep in mind, these garbage coins, all the altcoins are in this boat. We don't have a friendly interest rate situation, and the situation may get worse, right? We're not in that situation yet. Although we have these unusual things going on, like we see with the NASDAQ. Maybe some of these coins catch a bid or something, but I would not have high expectations. Let's just put it that way. Take your money when you have it. So good question. Okay, Han, it's good to see you again. All right. Alex says he's looking for a Bitcoin long. All right, good, cool. Everything that I just talked about earlier. Okay. Glad you guys are liking my new microphone setup here. My new settings. Can you take a look at Path? Okay. It's the only Romanian stock on the New York Stock Exchange. Oh, I had no idea. I know the guys in our active investor chat recently were long Path, because I saw that name called in the room. They bought some options on it. I know that, and I think they made some money. That was like a week ago, though. They made some money in that. So Path. Let's take a look at here on the bigger picture. I don't follow the chart myself closely. So it's a NASDAQ stock. All right. And again, levels, resistance. A lot of stocks are showing this. So if you're going to work with this stock, day trade or very short-term conservative swing trade, meaning you're looking for whatever you can and you get out, because this is not a good area. I would not characterize this as a low risk area. This is a high risk area. And it's going to be felt when the NASDAQ turns, right? When that money starts coming out. So, everyone's getting caught up with this short-term stuff and everyone's saying, oh, bull run. Okay, cool. Keep your expectations small. You want to go long something like this? I would day trade this, something like this, right? And then take your money and whatever. All right. Don't look for big wins. You have an inside bar developing here. This is a daily chart. You have an inside bar. This thing closes, right? We have 5 minutes before this stock closes. Tomorrow takes out the high, which is what, 1781. Perhaps you have yourself a little bullish day trade, right, into this area, something like that. That's the way I would play something like this, because again, I'm extremely conservative, and I don't believe in this hype nonsense. I don't, when everyone's optimistic, I'm the opposite, right? Especially when it comes to stuff like this. So I hope that gives you some insight there. All right, let me jump over back to TradingView. Let me see what you guys are saying over here. Okay, keep missing your streams. Oh, hey Steve, good to see you. It's been a while. All right, no problem. You can always watch the recap of it. What's your take on CME long shorts? If we look at the Commitment to Trader report, institutions, fund managers have 618 longs against 368 shorts, where the leveraged funds have 7625 shorts against. Is that information any helpful? Okay. The COT report at one time, I think, had more value than it has today, because the COT report, the problem is, look, everyone has access to it. When everyone has access to that, for one, it takes away the value. Number two, we don't see the report the moment the numbers are generated. I think there's a delay of some kind, right? You're seeing something from a few days ago or a week ago, something exactly. I don't know exactly, but here's the thing. You may be able to get some value from that if it gets extreme. That's how I would read that. Otherwise, a lot of times the numbers may look a certain way and you're like, oh, I think this, I think that. But don't make things more complicated than they have to be. All right. The idea of the report makes sense, but I have never really found it to be that useful, to be honest. I've looked at it. I don't really find it to be useful. I hope that answers your question. I appreciate your ideas on the broader structure, but Twitter is filled with gurus who are still extremely bullish. Normally, market makers counter trade their herd mentality. So right now, herd is mostly biased bullish. Right. So Nasir, yes, but you see, when you're looking at situations like it, they're all bullish because they're all caught up in this, right? And we've seen. I mean, look at this. Look at the price action. I mean, this isn't bearish. We may have bearish fundamentals floating around, but this structure is not bearish. So people are just buying and they're getting away with the, hey, I can buy it whenever it pulls back and I make money thing. We know how that turns out. This is a function of the treasury. So when the treasury stops, it's like they're playing the music. When the music stops, look out. That's all I can say. So I prefer the contrarian side. I'd rather be short than long. And on my managed account, actually, I have a very small short position in the NASDAQ that's against me, but it's small. it's so small that the Nasdaq could run another 2 or 3,000 points, and it won't even consume 5% of the account. Like, it's tiny. So I'm not worried about it, but I would rather be short than long. All right, especially now. I'm just saying that's just talk. We have no confirmations. There's no setups. We're not at levels, and it's counter trend, which is why I was small to begin with. Right, my counter trend rules are not the same as my trend rules. And you say, well, why don't you just go long? I can. I can actually hedge, but the problem is I'm not going to do it now, right? Not at the high. I need some kind of low, and this thing just doesn't pull back. One candle is not a pullback. That's a day trade, So anyway, it's been very tough. But anyway, I agree with you on that. What do you think of USAS America's gold and silver? All right, so Steve, gold has been unusual. Let's take a look at gold. Now, you're talking about what, some kind of fund? USAS America's gold and silver. Let's take a look at gold. XAU USD, right? Let's take a look at gold real quick. Gold, again, for people that get wrapped up in fundamentals and, the U.S. Treasury can't pay back its bills, gold should be through the roof. Do you remember what people were saying about gold a month ago? Gold should be at 5,000. Gold should be this. Gold should be that. Let me make the chart bigger. All this other nonsense, hype and nonsense about gold, that's when gold was here, right? Remember that? And gold went from there, instead of going to 5,000 or 3,000 or whatever, it went to here, 1938. So I think, first of all, gold is at a support level. I'm only interested in the support and resistance levels and the general structure. I don't care about the drama that surrounds gold. I don't care about the drama that surrounds all the other, all the big mouths, like this guy said with Twitter, and they're just hot air big mouths. That's all they are, looking for attention so that they can convert your attention to money. They get rich, not you. I look at levels. That's why I'm not popular, because I don't do that nonsense that they do. And no one listens to me except you guys, because you guys are informed. Anyway, I'm looking at levels and structure. I like gold long. I like the idea of gold long. Why gold is suffering? No idea. I don't care why. We're at a support level. So there was a buy signal the other day. It's going nowhere, but this can easily turn into another long if we get a bullish pin bar of some kind or another reversal off of this 1938 support level. The Federal Reserve may play into this very well on Wednesday, but going into that, this is probably going to be very tedious to sit through. So I want to see how that plays out. We may not get a nice clean-cut reversal candle. If there's some kind of surprise, the candle may start out one way and then look like this by the time we get the close on Wednesday. So the FOMC can have that kind of effect. Why? Because we're playing with the dollar. Gold is playing with the dollar. Anything against the dollar, pound, euro, they all look very similar to gold, right? We're playing the dollar. And the dollar, let's take a look at the dollar. Whenever you bring up gold, you should look at the dollar. Okay? Pull up the dollar index. Let me pull up the dollar index over here. And let's take a look real quick. Look at the dollar. The dollar has strengthened somewhat recently, right? This is the dollar index. I mean, look at this. We had some strength. And interestingly enough, dollar getting stronger, it's hesitating here. Dollar getting stronger is not exactly theoretically a good thing for the markets, because dollar getting stronger is anti-inflationary. So why is the Nasdaq going berserk, right? So there are very unusual things here that don't make fundamental sense. If the dollar continues higher, though, that will put pressure. That's going to just mount the pressure, the negative pressure. And that will also, if the dollar continues higher, that's a negative for gold. And that may help explain why gold has been struggling and can't get out of its own way. You need a weak dollar for that, right? And we don't seem to have a weak dollar. And there's a lot of just indecisiveness all over the place while we can't pay our bills back here in this country. Anyway, so I hope that answers your question. Pay attention to the levels. And, I'd be open to long-term. I'd be open, not long-term. I'd be open to swing trades long for something like gold. Okay? XAU. And silver is basically right behind it. Wherever gold goes, silver is right behind it. There's no point. You don't have to sit there and tear both charts apart. Hi, Zoran from Yugoslavia. Welcome. The link to the webinar. I don't have the link here. The best thing to do, you go to my website. You could join my mailing list. on from the website, and I'm going to send some more emails out with invitations. But you can also just come back to the YouTube channel. If you go to the YouTube channel, I have it scheduled to be on there too. You don't have to sign up for anything to watch it on the YouTube channel. Okay. Okay, cool. All right. From Yugoslavia. I don't think anyone ever from Yugoslavia has come to my stream. So welcome. What's your take on the harmonic patterns as a strategy for okay, that's a good question. I have never seen you use it, but it's really good. Hold on. What was that? It's really good. Hold on. I've never seen you use it, but it's really good. As Scott Carney is a creator. Right, sure. Okay, I'm very familiar with harmonic patterns, and I've experimented with them. And here's the thing. And Scott, I've watched him himself explain some of this. The patterns are, the idea is interesting because they give you some precise criteria to follow. The problem with them is they're random, like everything else. So, you may have like a pattern develop and it may work, it may not work. So I've experimented with them. I never found a good outcome, any kind of consistent outcome using them. And even Scott himself uses them like on a day trade time frame. Okay, which means he doesn't obviously believe in their long-term value either, and he's the creator. So he has like a chat room and stuff, and I'm familiar with that. But they teach you about pattern recognition and criteria, the use of criteria. I'd rather use classic patterns, like simple double bottoms, double tops, lower highs, higher lows, things like that. Now, I know, of course, the AB equals CD is basically like a higher low or a lower high, that kind of thing, but they have precise measurements. It's too complicated, right? And markets don't work like that. So I don't use them. That's what I think of them. So I hope that helps. Just a lot of complexity that you don't really need. You can just stick to double bottoms, double tops, and that kind of thing. Hey, nice to meet you. Okay, thanks for sharing. Okay, cool. Thanks for joining. Thanks for the wonderful stream. My favorite. Oh, cool. I appreciate that. From Belgium. You should say hello to Stian. He's in Belgium too. Okay, cool. I'm gonna have some Belgian waffles with you guys and beer. You guys are known for the beer. Erhan, how are you? All right, so I'm going back to YouTube here. CPI core. When is that this week? Right. So if CPI is coming out this week, that goes back to the economic calendar. That's important. Kai could also be general summer. Yes, Kai brings up an interesting point. Let me show this. People out in the sun instead of in front of the screen. Look what Kai's comment here. You see this? General summer, basically malaise, whatever. Summertime is typically when volume starts to go away, and it's a cyclical thing. I've seen this many times, right? Volume gets lower. There's less people involved in the markets. You realize people in Europe, vacation for them is like holidays, like 3 months, right? Here in the U.S., holiday is like 3 days. Over there, it's like 3 months. So people aren't paying attention to markets. There's less volume, which means moves can be muted. Markets can be very slow and uneventful. Keep that in mind. That's a good point. I haven't brought that up in a while. Thanks for sharing that, Kai. All right. So I took a paper trade in XRP. Okay, we talked about that. Okay, 1 hour time frame, he says. Right, and he had a take profit of 52, right, 0.522, and it got reached. And that was a very nice trade on XRP. Thanks to the trade scanner, because I never would have called that, right? So great job on that, Stian. And I have a few guys who've been taking that trades and reporting good results. It's not perfect, people, just so you know. It's not perfect. It's not one of these fraudulent 100% win rate systems. Like I said before, the win rate changes. It's how you manage the trade, right? So the idea is really like the trade management process, which I really work to educate people on, especially in the student meetings. Alex, let's not confuse Binance US. Well, okay, Binance US is not that important, and we probably won't affect Binance. Right, but he still took $11 million and bought a yacht with it, right? So whether it's Binance US or Binance International, he still took customer funds, and that right there is a bad sign. Okay, which means basically he's doing the same thing FTX was doing, except he's just not donating the money to the Democratic Party. He's buying his own stuff with it. Bad sign, red flag. Okay, red flag. That's all I'm going to say. All right, the problem that I have with this view that Binance is a bad player, and the SEC brings law and order. is that Binance behavior is literally every other. Yeah, well, yeah, Kai. And I'm not picking on Binance. They're all bad. Okay, I'm sure Coinbase has its own hidden secrets and all that other stuff. They're all bad, and I don't trust any of them, especially the derivative exchanges. Right? I get so many of them always reaching out to me. They want me to be an affiliate, and they don't even want to pay me. These guys, like, they're out of their mind. For one, I'm not going to risk my reputation. For two, I'm not going to do it for free. Anyway, I really have to believe in the exchange if I'm going to put my name on it, which, none of those derivative exchanges fit the criteria. The point is, they're all, you can't treat any of these companies, even Coinbase, you cannot give them 100% of your trust. You always have to you have to consider the risk. We can call it the FTX risk. They can, out of nowhere, something can go wrong, right? And turns out they were embezzling your money the whole time, and the exchange goes to zero. It can happen, and your money goes away. It can happen. Forex brokers, it can happen to them too, especially the ones that are not regulated in certain countries, right? So that's a risk that you always have to be cognizant of. There is no safety. These aren't bank accounts. And speaking of bank accounts, like in this country, they're not safe either. We've always taken for granted that, your money in the bank is safe. Not anymore, right? They can have, we bought too many bonds, we're going out of business, and there goes your money, right? But they're supposed to be, what do you call it? But the deposit insurance and blah, blah, blah. But okay, still, there's going to be an inconvenience. The banks here aren't safe either. There's no such thing as safe when you're dealing with financial markets. So understand that, okay? Don't take safety for granted. So good points, guys. Han, ARKG. ARKG? All right. And 11 million might be from their profit. No, Alex, they said he took that money from customer funds, commingled. Look at the allegations. Take a look at the allegations. That was in the SEC complaint, right? That money came from customer funds, not profit, or whatever, from the way I understood the allegations anyway. So red flag. Anyway, so ARKG, look, this is your typical genomic revolution. This is your typical Captain Obvious, anything with Cathie Wood. They should just call herself Captain Obvious too. Captain Wood, because seriously, Captain Obvious. All right. That's what this is. High or low, may go for the higher high. It's simply following the NASDAQ. Most importantly, again, everyone's going to get mesmerized by this. Bullish trend. I'm going to go long. I'm going to miss out. Okay. And ignore this. That's your potential right there. So if you're going to take any longs, that's your take profit area that you should be considering, and no more than that. And that's if it gets there. That's a multi-year high? Well, no, not multi-year. I'd say a yearly high, something like that. And that's a pretty clear-cut resistance level. You want to know what also looked like that on a larger magnitude or a larger scale? Gold, right? The high 2000s was a multi-year high, and we see what happened to gold. I wouldn't trust this thing for a second as far as, bullishness goes. Okay, Kai, brokers take your money and reinvest it into all sorts of things because retail, yes, right, that's true. Right, well, that's a conflict of interest. That's particularly with the Forex brokers. They take the other sides of your trades, and you lose, they win. This is all written into their fine print if you take the time to read the fine print. And a lot of people don't realize this. This is even worse with prop firms. Don't even get me started with the prop firms, okay? In fact, I want to make a video talking about them, but a lot of people will probably not appreciate that video. Anyway, so let's move on. My question was to your BTC analysis, in which I said that the big Twitter accounts are bullish. Normally when they are bullish, we are, yes, correct, Nasir. I have been countered against them for Bitcoin. So this is why I said Twitter's majority aligns with your analysis, which is why it makes me bearish. Okay, all right, so maybe I misunderstood the point that you were trying to make earlier. Thank you for clarifying. Yes, you're looking at the contrarian point of view. Everyone bullish, you're looking to take the other side, because when the herd is bullish, yes, they provide the profit for the ones in the know, right? The people that took the risk early on, or the people that had better information than everyone else. Understand, exchanges are not a place for you to make money. All right. This whole game of trades and this and that and investing, it's not a place for the retail trader to make money, even though that's what you think. And you come into this thinking that the whole exchange mechanism is for those in the know to profit from those who are ignorant. It's a transfer of wealth from the ignorant to those who have better information. And that could be, those could be market makers, insiders, whoever, right? People who have better information than you, professional traders. The market mechanism is a place to transfer wealth from you to them. Always keep that in mind. It doesn't mean that you can't win, but it means that chances are you won't win. You need to know how to protect yourself. That's the first step. Okay. Anyway, thanks for mentioning. Alex, sorry, I've been in Rome. Okay. Oh, no problem. In Rome. Oh, how nice. I'd like to go to Rome, but I'd have to stop in Romania first to say hello to all my Romanian friends. Okay. Were you in Rome because you're Romanian? Okay, that's a bad joke. I'm sorry. I just had to say it. Bad joke. Thank you. Good night. Okay, I'm joking. Okay, bad joke time. All right, let me move along here. So I think alts, I'm just going back here. I find the whole SEC stuff is just politics. Yeah, I agree. It is politics. But my point is, I'm telling people, don't get wrapped up in it. Don't become opinionated by it. Just toss it aside and focus on levels. Focus on levels. Focus on price structure. And when things change, meaning price structure breaks, levels break, that is when you make an adjustment to your perspective, not any time before. And you should not let fundamentals or things people say, like, well, I show you this graph over here, and in 1 year we should be here, and blah, blah, blah. Don't let that plant the seeds of opinion. Do not have opinions. People ask me all the time, what's your opinion? I don't have one. I adjust. The market tells me something new, I adjust. Han says, I think the alts that against BTC, just because made low lows, there is the relative weakness. A lot of these altcoins are garbage to begin with. They're highly speculative. And I've been warning people about that for years. They're not investment grade assets, most of them. Some of them I'm sure will be, but most of them are not. You want investment grade assets, look at high quality companies that produce things that people buy and use, right? There's lots of those, or even pay you to hold on to them, not altcoins. People have this idea that altcoins are future investments. That's just another lie that people have consumed over the years. Okay, right, I agree with you, Han. The NASDAQ, S&P are just going higher on a few. Yes, right. Well, that's the case with the indices, right? I mean, you have 100 NASDAQ stocks, and you have some heavyweights like Facebook and Netflix and Nvidia, right? They're driving it. It's just a couple of stocks. But when the party's over, right, and that excess money goes away and the music stops, the pullback is not going to be pleasant, and you're going to have all these clowns buying into that pullback. I'm not going to be buying into it. Maybe as a day trade, that's one thing. But I have very low expectations. Okay. Steen, can you put the chart bigger? Every time you put a message from someone in the stream, your screen, the charts get small. Oh, you mean okay, that was from a while ago, I guess, right? Like when I do this and if I put a message, right? I mean, it shouldn't make the screen too small when I do that. Anyway, that's not what I see. My comment on summertime is probably also true about YouTube. That could be. I don't trust. They are all bad. The SEC attack on crypto looks like a power play. Yes, I think so. I think there's some deep politics behind that are not put in front of us. Like, you cannot take for granted everything that they tell us, right? You cannot take anything at face value. This guy that's head of the SEC has a relationship with Bankman-Fried and his family. There's a relationship. You can go back and research that. I'm not making that up. So when there's stuff like that going on, it's a political game. Okay. Yeah. I just like to throw that in there because I'm sure Bankman-Fried is like, I told you, don't mess with me. Right. I'm sure. Anyway, while he's playing his video games. Okay. Politics. Yes. So that's why take that stuff with a grain of salt. Don't, and you guys know that because you guys know better. But there are people out there who don't know that. And what a lot of them do is they take this stuff literally and then they form an opinion on it. Well, if the market's like this, the market's going to be bad for a while, or whatever, right? Like just like back in March of 2020, when the market was selling off dramatically and the Fed put rates at -1%, whatever the interest rates went negative, and that was a time to buy. That was a market bottom. But your average retail investor is not aware of that relationship. So they're all afraid to step into the market while all the professionals are just piling in. Okay. And then when it looks safe, oh, it looks good now at the top, that's when the retail investors start piling in, right? That's the cycle. That cycle will always be that way. You need to be an informed investor, and we can't work with inside information. That's illegal. But politicians can, large institutions can, right? All that other stuff, they will always have better information than us. So the only chance we have as a retail trader, in my opinion, is by the chance that we have is we have to look at behavior. We have to look at aggregate human behavior as it expresses itself in price action. That's where charts shine. You can use the price action to get a sense of, okay, this is what's more probable. This scenario is more probable than that scenario. Even though we're always faced with a high degree of, we're always faced with a random nature of the markets, right? The markets are always going to be highly random. And we always have to take guesses with incomplete information. That is always going to be the case for the retail trader. So the best way to make these educated guesses is to learn how human behavior affects prices, because that's what drives prices. No matter what anyone says, it's people voting with their money, and they vote based on their perception. So if news comes out and it's negative news and it delivers a negative perception, people sell, right? For whatever reason. Some people get margined out, some people sell. It creates a negative perception of the future. Whether that is real or not doesn't matter, right? Like SEC sues these exchanges, bad, right? Everyone sells. It's a temporary negative perception of the future, right? So these erratic reactions, you do not want to be part of them. You want to learn how to anticipate the next move. And that comes from, you can derive that from technical analysis. That is the whole purpose of my training program. A lot of people that have been through it, they appreciate it. But people who have not been through it, and I talk about it, they don't appreciate it because it looks too simple. Oh, there's no complex wave stuff in here. Oh, there's no harmonic patterns. Oh, this is not worth it. This is not worth whatever. It's stupid. Right? I need complexity because people believe more is better. And I take the opposite view. So you want to keep things as simple as possible, and you want to derive that human behavior element. When you have a good grasp of that, and then you tie that into some of the theory, like efficient markets, then things start to make more sense. And then you're better able to control yourself because you know what's within reason and you know what's not. Okay. And then you start to assign probabilities to things. Like now with the NASDAQ, ridiculous highs. Good place for longs? Absolutely not. That's a very clear, decisive thing. There's no argument. Bad place for long-term longs. If you're going to do it, day trade. So you shrink expectations. It's all about adjusting your mindset. This is mostly a mind game. And that's sort of a little insight into that area. Okay. Well, when you come to Romania, oh yeah, Alex, I'd love to visit Romania. Maybe if Andrew and Tristan invite me. I'm joking. They would never invite me. I don't make enough money for them to invite me. But anyway, chances are high in Q3, which is why all the market makers are trapping bulls. Right. So yeah, I saw something about that too. And that could be the case, right? Or for whatever reason. But again, I won't go, I'm not going to sit there and bet on that opinion in a big way because I'm not going to fight the momentum. The momentum, the irrational nature of the market can wipe you out. Especially if you're very opinionated, oh, this is a short, and you go big. If I went big on my managed account at 13.4, I would probably be looking at a margin call right now. Okay. But I knew to go small Because I knew I was going counter trend for one, and my counter trend rules are not the same as my trend rules. I knew I could run into a problem. I don't know if I would run into a problem, but I knew the possibility was greater. So I go small. And now the market's against me and it doesn't matter. And I don't keep putting on more and more and more. I don't keep piling on to that, because that would make things worse as well. Again, I have rules for counter trend. Will I be able to get out of this trade with a win? Probably not. But I do believe I can reduce the loss dramatically if I just wait. I can also hedge. So I have options. Anyway, all right, you guys, I've been talking too long. So I hope you got some value out of this stream. I'm gonna wrap this up now. If I missed your question, I apologize. Look, do me a favor, press the like button, press the boost button, press the subscribe button if you like my content. Check out my webinar on Wednesday. You can come back to my YouTube channel, check it out there, or just go to my website, get on my email list, and you'll get an invitation. But you can just watch it on the YouTube channel. You don't need an invitation. Okay, so because it's free. Anyway, you guys, thank you for watching. I really appreciate you and your time here today. I hope you got something out of it. If you have any questions, feel free to reach out to me. You can find me in the community, or best just send me an email at mark@markpremarkets. That's the best way to communicate, so you know it's me. All right. So you guys enjoy the rest of your day. Enjoy the rest of your evening, wherever you are in the world. And thank you very much for watching.